Hi, and thank you for joining us on our Legacy Wealth Investment Chat. My name is Jen, the Head of Marketing, and joining me today is Mr. Dave Agar, our Head of Investments, who's got 20 years experience working in the UK, Malaysia, and Singapore. Dave, always good to see you, and what is this, week 7 or week 8 of the circuit breaker here in Singapore? How are you holding up? You doing okay?
Hi, Jen. Yeah, I'm doing fine, thanks very much, yeah. Just trying to work out which of us has got the worst lockdown haircut. And actually, I've got a feeling it might be you. But anyway.
You know what? You've got the kindest words ever, so thank you for that. Yeah. Actually, you're in trouble because this was done by my wife. You're in trouble now.
Mine was done by my 10-year-old, Jen. So.
Well, I think in terms of haircuts, I think it's 1-1 for the both of us. So, I mean, the reason why we're here in the lockdown and circuit breaker is because, obviously, of the COVID-19 virus. So let's talk about investing post-COVID-19. Yeah,
I think the starting point usually when we have these kind of events is to look at what's worked in investment terms historically. And I think that's probably a good starting point in this situation as well. A couple of things are different, I guess, and one of those is central banks are very, very involved at the moment in investment markets, their activities. And then the other thing we should probably account for is that historically, at least, the economy has tended to show signs of development, accelerating development, for things that were kind of in place before as well. So a disruption can kind of speed some of those changes up. So I guess it's a combination of those things really. And just other than that, ensuring that you've got a financial plan and that your investment portfolio aligns to that.
And things are changing rapidly. And of course, in terms of that, it's the new normal these days. We're working from home. We've got the Zoom calls. What should an investor do?
So obviously this starts from an understanding of your risk profile, of your investor profile, and of what it is you want to achieve through your investments. As I say, I think there's many lessons that history teaches us around the recovery from crises, from bear markets like this. And it's very important that you, as an investor, that you understand what those are and what those teachings are. Some things will continue to be the same, inevitably, and a lot of our day-to-day lives will involve us interacting with companies, with buying things that we did before, and so many of the same companies that were performing well before will probably continue to do so in future. So aside from a couple of those I guess relatively small changes that I think will impact things, I think that's a good starting point.
Okay, so do you reckon there's any more lookouts, any more concerns?
So one thing in terms of the behaviour of the markets through this crisis, which has been a little different to previous, is how dramatic some of the changes have been. So the performance of the markets prior to the sell-off, the bear market, was relatively good, and then we had a very sharp drop in securities markets very quickly. Much more dramatic actually than the aggregate of all of other bear markets that we have historical data on. And then the recovery from that sharp fall has been quite good so far. I would say that one thing we should always expect with markets, and particularly now, is there will be much more volatility. There will be further corrections, as there always are. And I think investors should ensure that they feel comfortable with that if they're investing, especially into equities.
And of course, something that we must talk about in terms of government bailouts globally, helping small businesses, big businesses, residents as well. How is this going to affect the markets?
Yeah, that's certainly a factor, I guess, on, if you will, on kind of on a micro side of things. I think on the macro side as well, we've seen unprecedented central bank activity. We saw the Federal Reserve go into the market and actually provide liquidity for a bond ETF, which is, as I say, unprecedented. A lot of the things that the central banks were doing are continuations of what they've been doing since 2008, which is providing liquidity, is running very accommodative monetary policies, and that absolutely will have an impact on the behaviour of investment markets. If anything, it appears that it's the case that central banks will be going one step further. The concept of modern monetary theory around at the moment, where essentially central banks can just keep printing money and running big deficits. That again will have a huge impact on the performance of the securities markets in the future.
So which leads to my final and ultimate question for you. I mean, you're a man of knowledge, insight. So tell us this. When is this virus going to end?
Yeah, sure. Great question, Jen. Yeah, I'll just check my diary and my my crystal ball appears to be broken, Jen. I'll leave it to people who've got much more medical knowledge than I have. So yeah, can't help on that one.
All right. Thank you so much for that, Dave. Take it easy, and I hope you're keeping well. And let's check our haircuts maybe from a week from now.
Surely they can't get worse. Thanks, Jen. All the best.
See you, mate.
Bye.
Bye.